Good morning, ladies and gentlemen. So nice to see so many of you here on an early Sunday morning. I think yesterday you have heard from one of our colleagues, Wilson Tan, who is CEO of Capital Mall Trust, the largest REIT. That's one of the CapitaLand's family. If you're not aware, CapitaLand actually we have 9 listed entities. CapitaLand obviously is the largest, one of the largest real estate company. Market cap about 13 billion, listed in Singapore since November 2000. It came about from the inception of a merger between DBS Land, which was an associate of DBS Bank, and government-owned company, Fidemco Land. And in 2002, I think we pioneered the first REIT in Singapore, which was Capital Mall Trust. Subsequently, I think we created another 4 REITs in Singapore: Capital Commercial Trust, Capital Retail China Trust, and of course, you just heard from Ronald, Ascott Residence Trust. And then we have also 2 REITs listed in Bursa, Malaysia, which is Capital Mall Malaysian Trust and Quill Capital Trust. And we have 2 other subsidiaries: Capital Malls Asia, which is a 65% owned subsidiary of CapitaLand. That's a pure play developer of retail malls, mainly in Singapore and China. The Singapore ones are all quite stabilized, so they're held through the REITs structure and the stake in Capital Mall Trust. And of course, we have a 60% owned subsidiary listed in the Australian Stock Exchange called CapitaLand, which is a very old company. They are primarily a developer as well as a property investment company. So let me, over the course of the next few minutes, just share with you CapitaLand itself. I think some of you may be familiar. There's a lot more information in our website, so I do urge you to go and visit our website, which we like to think is very user-friendly. Copy of this presentation is actually already been posted on the website since Friday. So my presentation will just give you a brief outline of our recent second quarter up to first half financial results, some of the core market highlights, and then a little bit of glimpse to give you a sense of how this company is growing in the course of the next 2 years. What are some of the things we intend to embark on or we're going to execute and hope to deliver to create value for our shareholders, and then just rounding that up. So quick glance. First half of 2012, you can see that our net profit was 519 million. That's a gain of 4%. But more importantly, I think if you look at the operating level, that's actually gone up 14%. Operating profit means our net profit ex revaluation gains, because we do revalue our investment properties twice a year, and also there are some what we call the realized gains. But the important thing to focus on is on the operating profit. We have 3 core markets. Later on, as you see, I will highlight 2 of those, really, Singapore and China. And together, these 3 core markets accounted for 87% of our what we call earnings before interest and tax. That is actually the profit we generate before taking into account expenses that we pay on the interest on the loans that we borrow, and also paying the tax man. And if you look at the 2 main core markets, which is Singapore and China, in fact, they accounted for almost 70%, 721 million Singapore dollars. We are very pleased. We have actually seen a strong pickup in sales momentum, particularly in our residential projects in both Singapore and China. And we also had better operating performance from Capital Malls, Asia's retail malls, as well as operations of CapitaLand. And just to mention a little bit on the balance sheet, I think we have a very strong financial position. We have what we call gearing, which is net debt divided by our shareholders' funds of about 0.41. And we also made new investment commitments to a total value of about 2.4 billion in the first half of this year. This comes on the back of about 11 billion of new investment that we committed in 2011, and another 5 billion that we committed in 2010. So later on, I think when I present the going forward section, you see I will try and link you back to some of these projects that we have actually announced or started, embark on, and we hopefully will be beginning to harvest some of these projects that we invested in. Just a quick snapshot of the profit. I won't dwell too much about it, but in terms of earnings per share, you see that's about 12.2 cents per share for the first half. The net tangible asset, I think that's actually the book value, is 343 as at the end of June this year. So you can see that actually we are currently trading below our net asset value per share. Stock closed at about 306, I think, on Friday. Historically, if you look, we actually have traded at about a 1.1 times book. So this is quite unprecedented that we have been trading. We were actually hit quite badly, I think, in terms of the market sentiment, particularly in 2011, because of the various cooling measures, which was targeted only at the residential sector in both Singapore and China. But I'd like to mention and put it into perspective, CapitaLand total exposure to the residential sector in Singapore and China only accounts for about 28% of our entire asset base. We are actually very well balanced across the other property segment, particularly retail, which I think, if you look, has been very resilient and unaffected, in fact, and not targeted at all by the Chinese authorities. In fact, I think if you are well familiar, the Chinese authority is trying to boost domestic consumption. So I think the retail malls actually are doing extremely well. Retail sales are growing at something like about 13 to 15% monthly in China. In total, actually, the group, on a property value basis, we manage something like about 61 billion worth of real estate. Some of it we own directly or through joint ventures. Some of it is through our private equity funds. If you know, we also are a fund manager. Some of it is through our REITs. They're listed. And a small amount, I think, are JVs. So this is, I mentioned earlier that the two core markets, as you can see, Singapore and China, I think just focus yourself on those two numbers. China, in fact, accounts for 29% of our EBIT, and Singapore delivered about 40% in the first half. And this is how the 2.4 billion of new investment that we have actually committed year to date is broken down. You can see, again, very much centered on the two core markets, which is Singapore and China. Japan accounted for 25%. That's because Capital Malls Asia bought a mall in Tokyo, Oninas Mall. So let me just quickly run through some of the core highlights in Singapore, our home market. You can see here, as I said, if you look at Singapore itself, residential accounts for 30% of our portfolio. And then we have retail, which is 39%. So actually the retail portion is the largest assets that we have in Singapore. The commercial and mixed development are held mainly through our investment property, through our stake in Capital Commercial Trust, and which comprise mainly of Grade A office building. And of course, there's a Raffles City in Singapore, which is jointly owned by our two REITs. Capital Mall Trust owns 40% and CCT owns 60%. The service residence that you just heard about from Ronald, that accounts for 7% of the asset base in Singapore. A few highlights, I'm just running through quickly on some of the highlights of the various segments. Residential, you might be quite familiar. We actually launched this project in Bishan, Sky Habitat, in April, and we launched about 180 units. To date, we've sold about 70%. But more importantly, I think we've hit a new landmark price for a development in that area. We achieved an average selling price of about 1,650 per square foot. So in total, I think we sold about 260, just short of 260 units, worth about 467 million from the various development as listed. That's a picture of a Sky Habitat at the bottom. If you've not seen it, the show flats are obviously still available. They're open. And the picture on top is the Bedok Residences. There is no show suite now on the site, I think. We have taken away because show suite was not on the site. But this project is almost completely sold out, as you know. There was quite a bit of publicity when we launched it. Long queue. And I think we sold something like a couple of hundred units within the first 3 hours. This is a new, brand new Grade A office building which we are building. It's formerly called, known as the Market Street Car Park. If you've driven around the CBD, you've seen that it's completely demolished, and this is what's going on there. This building will be ready towards the end of 2014. This is another mixed development. It's actually at the Jurong East Regional Centre. It's called Westgate. It's directly linked to the Jurong East MRT station within the vicinity of 3 of our malls, J-Cube, IMM, and of course will be Westgate. So we are, as you can see, the retail mall will open for business, we hope, by end of next year, just in time for Christmas shopping. And the office tower will be ready by towards the end of 2014. In fact, we made an announcement, I think about 2 weeks ago. CapitaLand Group will be moving and occupying about more than 50% of the office tower. That will take place beginning from the beginning of 2015. This is the retail. This is mainly through Capital Mall Trust in Singapore. That's a picture of Star Vista, which is actually right next to the Buona Vista station. If you have taken a train there, you'll see it actually looks like a battleship. We actually own only the retail space on the lower ground floor. On the top, obviously, is a 5,000 capacity civic theatre owned by the Rock Foundation, Rock Connections. On your right is a picture of Bugis Plus. It was formerly called Illuma. We took over it, and we spent about 38 million to asset enhance this property. And now it's officially open. It's fully leased practically. Service residence, I think this is one transaction that we did recently where Ascot sold one of its property, or rather Art, Ascot Residence Trust sold one of its property to CapitaLand, and in return, CapitaLand is going to develop it into a residential tower as well as a service apartment with a hotel license, so they can do a daily let when it's completed, and this is expected to be delivered in about 2017. At the same time, it also Art Residence Trust also bought 2 properties from Ascot, its sponsor, which is the Ascot in Guangzhou and the Ascot in Raffles Place in Singapore. So I think just to say that net is a very profitable. There was a win-win situation for both. Shareholders, I think, voted almost 99.6%. I think voted for this transaction, and the expected profit, I think, arising from this is about just short of 99 million. Let me briefly just run through our second most important market. In fact, China is CapitaLand's biggest market in terms of asset. It accounts for 41% of our balance sheet. And how is that 41% broken down? As you can see, again, the retail portion is the largest concentration. Accounts for 35%. So that's a sector that's not affected by any of these so-called cooling measures implemented by the Chinese administration. Residential is about a third, and then our commercial and mixed development accounts for 22%. These are mainly in the form of our Raffles City. We actually have 8 Raffles City projects in China, of which 2 are operational. The rest are still under development. And we also have a new business unit, what we call value housing. This is equivalent of the HDB, or we could call the EC. This business unit will be launching its first value housing in a project in Wuhan by the end of this year. I mentioned about the pickup in sales momentum in the residential sector. So these slides, I think, illustrate the pickup you can see. If you notice, the orange is what the sales quantity in the first quarter. You can see the pickup in the second quarter. So we're up about, on year-on-year basis, the whole first half was up 18%. But you can see on the value side, both value and unit sales have both picked up quite strongly. And I think happy to report, looking at July, I think the momentum has carried through. So I think looking fairly positive. It's a picture of the launch of one of our projects in it's a Beaufort, phase 3 of Beaufort in Beijing at the Third Ring Road. It's quite different from how launches are done in Singapore, as you can see. People actually can re-register before that their interest. So at the launch itself, it's just a matter of just collecting and signing taking the option. We also handed over some new projects. This is a residential project called the Pinnacle. It's in Shanghai. It's quite close to the site of where the World Expo was held. 4 blocks comprising 234 units. Yeah, this is what we call the Capital Value Homes, the business unit that's doing this value housing. Value housing is actually targeted mainly at the first-time home buyers. It's the entry-level mass market, but it's not what we call the social housing, which the Chinese government is embarking on. Those are mainly for rent or is price control. So Capital Value Homes has a pipeline of about 5,500 homes across 3 projects currently. Lakeside is a project which they intend to launch at the end of this year, perhaps 1,000 units that will targeted to be launched in Wuhan. They have a project called Rivervale, that is in a city called Panyu within Guangzhou, and the project in Pudong in Shanghai. Yeah, it's a picture of ongoing works on the site in Wuhan. Yeah, I mentioned earlier about the 8 Raffles cities that CapitaLand has in China. So for some of you who've been to Shanghai or Beijing, I think if you travel around, you have probably seen or even shopped in one of these 2 operational Raffles City. Both are performing very well in terms of operation. If you look at Raffles City Shanghai itself, the yield on cost, that means based on original cost, is actually about 17%. Raffles City Beijing, our yield on cost is about 11%. Of course, these properties are revalued annually, so the yield on valuation is lower. And the office tower within both of this Raffles City are also almost practically fully let. Raffles City Beijing actually has an Ascott Beijing, but Raffles City Shanghai only has a retail mall and an office tower. I was there yesterday. Sorry. Raffles City Chengdu is about to be open, in fact, towards the end of next month. And one to the right is actually Raffles City Ningpo, which also will be open in September. They are both, Raffles City Chengdu is about close to, if you based on committed leases or indication of leases, I think it's almost 90-odd% let. And Ningbo is about 60-odd% let for the retail portion. These pictures, artist impression of the finished product, but the current state of development of Raffles City, Shenzhen. The middle one is Raffles City in Hangzhou. And extreme right is the Raffles City Changning. It's the second Raffles City in Shanghai. And this is the 8th Raffles City. This is Raffles City in Chongqing. In fact, groundbreaking will take place next month. This is a picture where there was some unfounded speculation that this project was delayed because this project actually was tied to the former party secretary, Bo Xilai. I'm sure you're very well and what's going on there, particularly with the recent conclusion of the trial of his wife. But to dispel it, I think we made a presentation. This is a joint venture between CapitaLand, Singbridge, as well as a local party. So I think everything is going well. The master plan has all been approved. In fact, we've taken over the site. That's why we're going to break ground. And all the resettlement is undergoing. Just some pictures to show you, that this is indeed going on. So within China, the service residence also is doing well. I think in the first half, the so-called, they led with a 20% increase in revenue per available unit. They also secured their third management contract in Chengdu, which is the Ascott in Raffles City, Chengdu. And they divested a Citadines property, but continued to manage it and realized a gain of 14 million. You do have a picture of Raffles City, Chengdu. This is the one. It consists of 5 towers. There will be service residence, which will be managed by Ascott. Then I think there's a residential block. The retail mall occupies the ground floor, and there's a very big plaza as well. So you see some publicity, I think, from this because it's actually very well sought after, and it's very strategically located. As you land on your plane and you head towards the city center, you can see it on the right. It is so tall and so magnificent, you cannot see it. In fact, my president, Mr. Liu, who has visited all these projects, he said this is probably the best development that CapitaLand has ever built. The master architect is Stephen Hall, world-reclaimed architect from US, and it's just very impressive. He said, if you're a Singaporean, you go to Raffles City, Chengdu, when it's open, you feel very proud. This is a mall which was acquired by Capital Malls Asia. It's called Tian Gong Yuan. So it's a fairly big mall with almost 2 million square feet. This is another mall which they bought and, in fact, opened for business on 14th of July. This is Taiyangong, also in Beijing. You obviously can find out more when you go and visit Capital Malls Asia website. Unfortunately, they're not presenting at this seminar. Yes, they also created a US 1 billion China retail fund. This is our third private equity fund. So the intention of this fund is to hold some of these assets during development stage, and when it's completed, either we could continue to hold them or convert it into an income fund, which we have done, or at the right time even offer it to the Capital Retail China Trust, the REIT listed in Singapore. Or should the REIT regulation come about in China, our preference would be probably put it into a REIT structure in China, because we think that the biggest pool of liquidity actually is a whole market, and the assets actually is best to list it where the assets are. And through that way, actually, you tend to attract what we call the lowest cost of capital. So this fund actually at the moment has got 3 seed assets. There's one Capital Mall, Meilichen, that's in Chengdu. Another one is Tianfu, also in Chengdu. And then the next one will be a very large, integrated, strategically located, is a Luan mixed development. Just a brief mention of some of the other things that we did in the first half of this year. In terms of the financial services, this is under our financial services wholly owned subsidiary. And together we manage something like about 36 billion worth of assets, mainly focused in Singapore and China, as you can see. Singapore accounts for 47% of that portion, and China 38%. And in the first half, we earned about just short of 90 million in terms of fund management fees from this operation. So split mainly, the REITs owns 57% of these funds, of the assets. The rest are held through our private equity funds. This is a retail development undertaken by Capital Malls Asia in Malaysia, joint venture with Sime Darby. We also divested our associate status in a listed company, United Malayan Land, UML. I do apologize. Some of the pictures have gone. They were meant to be 2 pictures of a store hub. I think, if you're familiar, I think CapitaLand, through our commercial arm, we also have a JV with Hershing in Store Hub. So we've also started to expand this business in China. So they secure 2 properties in China, one in Guangzhou and one in Shanghai, and looking to expand the China portfolio. We also, last year, I think, took a 40% stake in Sabana. Sabana is actually the former HDB that's been privatized. So they continue to maintain the dominance of the HDB market, having secured about 9,000 residential units, BTO. At the same time, they've made inroads into the private residential space as well. They also have ongoing the 4 townships with sales going on. They've sold about 1,300 units in the first half of this year, bringing their total sale to about 15,600, and developing a 5th site in Chengdu. Okay, this is probably more interesting for you. We're coming to the last section, just to give you a feel of what to expect, and you can track us as we execute on this development. So for the remainder of this year, in the second half, Capital Malls Asia is going to open 5 more malls in China. They just opened one recently. And we have one mall opening, which is actually Star Vista. We've undergone some what we call asset enhancement in 3 of our retail assets, and I think this will be completing towards the end of the year. Bugis Plus, that's already completed. Clarke Quay, we're doing some asset enhancement in one of the blocks in Clarke Quay, will be completed pretty soon. And towards the end of the year, I think we'll complete the atrium. The atrium, I think, is, as you know, is being hoarded. Some of the hoarding is being taken down. It's actually being merged together with Plaza Singapura. And the new project, I think, will be very grand. There'll be much more shopping. There'll be interlink between Plaza Singapura and the atrium. We will complete and hand over our Wharf Residence. That's a residential project that we sold substantially. In fact, practically sold, except for 5 penthouses. It's at Tong Huat Road, which is just off Robertson Walk. We continue to launch new phases of both the Interlace and Sky Habitat. In fact, Interlace, I think we've put out some garden units. Welcome to go and visit those. In China, we're going to hand over 2 projects, the Loft and Dose Vita. And as I said, Capital Value Homes will launch the sale of its first project in Wuhan, CapitaLand Value Homes Lakeside project. And then we'll, as I said, next month, we're going to open Chengdu, Raffles City Chengdu, Raffles City Ningbo, and there's a groundbreaking of Raffles City Chongqing. As we roll into 2013 and beyond, into 2014, 2 more China malls opening in 2013, and 6 more in 2014 and beyond. Westgate Mall, the shopping mall, will be completed towards the end of 2013. We expect to hand over 8 China residential projects over the course of 2013. More importantly, I think, as you know, in Singapore, we recognize as construction takes place, so we'll be able to recognize the sale proceed from Bedok Residences and also Sky Habitat. They were launched last year, but by which time we will have hit a progress recognition stage. And then we'll hand over 2 of our high-end residential projects in Cairnhill in Singapore, Urban Suite and Urban Resort, and also hand over the Lakeside project in Wuhan towards the end of 2013. Going forward, as we roll into the year 2015 and beyond, Bedok Mall will be ready towards between 2014 and 2015. We expect another 4 more Raffles City to be completed and handed and operational from 2015 onwards. And Capital Green, the office tower, that will TOP towards the end of 2014, and also Westgate Tower in 2014. So in conclusion, just to round up, I think the home purchasing momentum in both Singapore and China, as we said, I think has accelerated, particularly in the second quarter, and we still see it sustaining. So we'll continue, obviously, to monitor policy measures, which is really targeted really at the residential sector in both Singapore and China. We have invested 2.4 billion in terms of new investment. These are sowing seeds to be harvested in the years to come. We currently have a cash balance of about 5 billion, so a very healthy balance sheet. That will give us even more capacity to undertake new investment. and capitalize on market volatility. So I think that's the end of my presentation. I'm more than happy to take some of your questions later on during the panel discussion. Thank you very much.